Like many investors, I've spent years searching for a better way to invest. Not a shortcut. Not a guarantee. But a disciplined process that could improve my decision-making over time. This video is the first step in that journey. To better understand the future, I began by studying the past. Using 10 years of historical market data, I analyzed 101 Nasdaq stocks to see what the data, not my opinions, had to say. This is what I discovered. In this video, I'll show you how I built a complete research framework using Excel, Power Query, Power Pivot, Thinkorswim, and Python to optimize my trading strategy. Welcome to my channel where we let the data decide. My name is Steve Goldendale. Today I would like to share my story with you. I've used a mean reversion strategy for many years with fairly good results. But I've always wondered, first, could my strategy be improved using historical data? Second, which Nasdaq stocks responded best to the strategy? And third, could the entire optimization process be automated and validated using multiple software tools? Everything you'll see in this presentation is designed to answer those three questions. What began as a simple trading strategy quickly evolved into something much larger. First, I built the backtesting engine in Excel. Then I automated the calculations using Power Query and Power Pivot. Python was used to validate the calculations, while Thinkorswim confirmed that the trading signals matched the backtest. Finally, the optimization process expanded to evaluate 101 Nasdaq stocks across 160 parameter combinations, creating more than 300,000 rows of research data. At that point, the project had grown into the foundation of GDI Research. This is my strategy, which I call BRSS or BRAS, which stands for Bollinger Bands, which identifies potential price extremes. RSI Relative Strength Index, which measures whether a stock may be overbought or oversold. SMI Stochastic Momentum Index, which measures market momentum. And SMA Simple Moving Average, which identifies the long-term trend. Together, these four indicators form a simple rule-based trading strategy. The entry rules are a Bollinger Band signal at 2 standard deviations. RSI below 50, SMI below -20, and the 200-day SMA. The exit occurs at 1 standard deviation above the upper Bollinger Band. It's a straightforward, simple approach. Every trading strategy contains assumptions. Rather than guessing which settings worked best, I wanted the historical data to answer that question. 1. Can the entry rules be improved? 2. Can the exit rules be improved? And 3. Which stocks would respond best to the strategy? Those questions became the foundation of the optimization process. Historical price data for 101 Nasdaq stocks was imported into Excel. Power Query automated the calculations. Power Pivot summarized the results. Python independently validated the calculations. Thinkorswim confirmed that the trading signals matched the historical charts. Finally, 160 parameter combinations were evaluated and ranked using a weighted scoring system. After the optimization process, we then applied a ranking method using 4 important measures: return on capital %, win rate %, profit factor, and number of trades, to rank each of these 160 parameters. And after evaluating all 160 parameter combinations, one setup consistently rose to the top. I expected my original strategy to finish near the top. Instead, it ranked only 76th out of 160 parameter combinations. What surprised me most wasn't that a winner emerged. It was that ID 35 stayed on top through multiple audits, formula revisions, ranking changes, and trade log validations. The optimization process produced significant improvements over the original baseline strategy. Win rate increased. Return on capital improved. Profit factor increased. Annualized return improved. More importantly, these improvements were achieved using the same disciplined, rule-based approach. The data, not personal opinion, determined the final parameter settings. ID35 outperformed the baseline across every key metric. Total profits rose 21.5%, return on capital increased 14.5%, annualized return on capital climbed 35%, win rate improved 1%, profit factor gained 17.7%, and the number of trades increased 7.4%. These results show the optimization process added significant value. Here's the winning setup. After evaluating 160 different parameter combinations, ID35 emerged as the highest-ranked configuration. Notice that the biggest improvements aren't dramatic, they're subtle. The strategy enters trades slightly earlier by moving the lower Bollinger Band threshold from 2.0 to 1.8 standard deviations. It also exits trades slightly earlier by reducing the upper Bollinger Band threshold from 1.0 to 0.75 standard deviations. The remaining indicators, RSI, SMI, and the 175-day simple moving average, act primarily as confirmation filters, helping improve trade quality while managing risk. Sometimes, small adjustments in the right places can produce meaningful improvements in overall performance. The optimized strategy didn't become more complicated. It simply became more refined. With the optimized strategy now established, the next question was obvious. Which stocks responded best to these optimized rules? To answer that question, every one of the 101 Nasdaq stocks was ranked using the optimized ID35 strategy. Let's begin with the highest-ranked performers first. As expected, NVIDIA was number 1, followed by KLA Corporation, Micron Technology, Vertex Pharmaceuticals, and Applied Materials. One of the first surprises was that the highest-ranked stocks did not necessarily have the highest win rates. At first glance, that may seem counterintuitive. However, a successful trading strategy is about much more than simply winning the greatest number of trades. Return on capital, profit factor, and the consistency of those returns are equally important. That's why the final rankings are based on a balanced evaluation of several performance measures rather than any single statistic. Perhaps the biggest surprise was who wasn't on the list. Apple Incorporated, Amazon.com, Microsoft Corporation, Meta Platforms. These companies have rewarded long-term investors for years. Yet under the optimized brass strategy, other stocks consistently produce stronger historical trading results. That's exactly why objective testing is so valuable. Sometimes the data challenges our expectations. This research wasn't designed to identify the best companies. It was designed to identify the companies that historically worked best with this specific trading strategy. Before we move on to the remaining 71 stocks, let me show you the rankings of the Magnificent Seven. Although these companies generated outstanding returns for the investors, their optimized trading rankings for this strategy varied considerably. Now let me show you the remaining 71 stocks. The two tables on the left represent the middle 41 companies, while the two tables on the right show the bottom 30 stocks as ranked by the optimized ID35 strategy. Let's turn our attention to the lowest-ranked group. The bottom 30, led by ARM Holdings, Kraft Heinz, Cognizant Technology, Mondelez International, Gilead Sciences, and others, generated little or even negative returns on capital under this strategy. Rather than reviewing every company individually, notice the gradual decline in performance as we move through the rankings. One of the more interesting observations was how many well-known Nasdaq companies appeared among the lower-ranked group. While many are fundamentally strong businesses, They simply did not respond well to this particular trading methodology during the period studied. Understanding which stocks historically performed poorly under this strategy may be just as valuable as identifying the strongest performers. Knowing both the strengths and the limitations of a strategy can help investors make better informed decisions. Finally, the smooth distribution of results gives us confidence that the weighted scoring model successfully distinguished stronger historical trading candidates from weaker ones, using a consistent and objective methodology. Objective research isn't just about finding opportunities. It's also about recognizing situations where a strategy has historically been less effective. The value of this research isn't simply identifying the highest-ranked stocks. It's helping us understand where this strategy has historically performed well, and where it hasn't. This project began with 3 simple questions. First, could the original brass strategy be improved? The answer is yes. Through systematic optimization, the original baseline configuration improved, from a ranking of number 76 to the number 1 overall strategy. Second, does stock selection matter? Again, the answer is yes. Testing the optimized strategy across all 101 Nasdaq companies clearly demonstrated that some stocks consistently responded better than others. Finally, could this entire research process be automated? The answer is also yes. By combining Excel Power Query, Power Pivot, Thinkorswim, and Python, the complete optimization and evaluation process can be automated. More importantly, we've created a repeatable research framework capable of evaluating many more investment strategies in the future. The greatest value of this project isn't simply identifying the highest-ranked stocks. It's demonstrating how objective research can help us make better investment decisions. Whether you're an investor, trader, or options strategist, the same disciplined process can help identify stronger opportunities, improve trade timing, and better understand the strengths and limitations of any strategy. Research doesn't eliminate risk, but it can improve the quality of our decisions. This project marks the beginning of a much larger journey. There are thousands of investment strategies waiting to be explored, countless questions waiting to be answered, and many opportunities to learn from objective research. I hope you'll join me as we continue that journey together. If you found this research helpful, I'd like to invite you to join the GDI Research community. Subscribe for future strategy evaluations, optimization studies, and objective investment research. Thank you for watching. And until next time, let the data decide.